Let's get another check on shares of Tesla after the company blew past Wall Street expectations in the first quarter, reporting a record $3.3 billion in profit. The shares are up more than 10.5%. Joining us now with more on Tesla's latest earnings, Jefferies Managing Director Philippe Houchois. Philippe, thank you for being here. I know what got your attention and what got a lot of folks' attention was that automotive gross margin, which was above 30%. And as you said in a note to investors, cost of goods sold per unit was actually down. So it wasn't just about Tesla raising prices that contributed to that margin. How did Tesla achieve getting those costs down, and can it continue to keep them down?
Well, that's going to be good questions. I think the reason they get costs down is because, well, first of all, I mean, they're growing very, very fast, so they leverage their cost base much better, whether it's depreciation or the volume of cars which they amortize the R&D. But also, I think what Tesla is doing is a very different approach to the auto industry business model. The industry is based on complexity of cars, complexity of models, and what Tesla is trying to do is basically sell as many cars of a very small number of models, and then you get basically leverage through the fact that you have relatively few components. Your cars are relatively simpler to assemble compared to your competitors, and that continues to improve to give you productivity gains. And that's we'll see how long that can continue, but it's a big part of the reason why the cost of goods sold per car is basically going down. So it's interesting because I think people expected there'll be a move up in revenue. And actually, the move up in revenue wasn't that visible in Q1 versus Q4. What is going to be interesting to see is that normally, based on what the CFO said, the backlog of cars, the order book they have, is on a higher pricing.
Philippe, let me look a little longer term because Elon Musk mentioned on the call last night, by 2024, they could be making at some form of volume autos with no steering wheel and no pedals. How big a business do you think that will be for Tesla over the next decade?
Yeah, it's the dream of the Robotaxi, and a lot of people have been working on that. I'm still a bit skeptical. I'll believe it when I see it. I think the economics of the Robotaxis are not that clear. We know Cruise and GM have been working on that for a while. But it's interesting because it's a departure from what Tesla had been saying in the past. The idea was that Tesla would stop selling cars. They would only lease cars. Those cars would come back into the Tesla network. And so this idea of creating a specific model for Robotaxis is intriguing. They can produce it as a car fairly quickly or simply, I think. Of course, FSD has to work. So we'll see how that develops in the course of 2022. But the claims that it will be cheaper to ride in Robotaxis than buying a subway ticket or a bus ticket, that part we need to validate.
I want to ask about lithium, right? Because that may be one of the limiting factors to how many Teslas can be made. Are you optimistic that they'll overcome that? I mean, there's only so much that you can get out of the ground, and there are only so many producers out there. Is that something they can figure out?
Yeah, no, I think Elon Musk was very clear warning about the issues of material availability. He's also very vocal saying there's lithium everywhere in the world. So it's not the issue of, it's basically the timing, getting the right amount of lithium, getting it extracted on an economical basis, and matching the demand of the industry to use lithium in batteries with the ability of extracting the lithium, processing it in sufficient quantity. So I think it's more of a mismatch in the timing of that availability rather than a shortage of the material itself. There are other materials we can worry about a bit more, like nickel. But I think what's interesting for me is how long Elon Musk has been warning about these issues. And they've acted accordingly. They seem to have secured raw materials in quantity, in some cases at a lower price than what the market is today. What was clear also from his comments yesterday was that he sees those pressure on materials as a potential headwind for EV adoption. And of course, the part of the issue is to figure out who else in the industry has secured sufficient materials or who is at risk of basically falling behind a little bit in market share as the whole industry transitions to EVs.
Philippe, obviously Tesla seems to be having no problem with demand for its cars, even at the price points where they are. But do you think Tesla should be coming out with a lower priced car, and do you think they will?
Well, it's important. I think a big driving force of Tesla has been affordability. And Elon Musk wants to speed up the adoption of a cleaner energy world and cleaner transportation. What is odd today, in 2022 at least, is that he's basically this structural target of affordability has been kind of set aside, and there's an impression that Tesla right now is maximizing profits. And it makes sense because it's not just Tesla, but the whole industry is in a shortage situation. You cannot produce enough cars. Tesla is a bit better than the others producing. But effectively, they seem to be maximizing profitability today. That is not a strategy. I think it's a tactical move on the part of Tesla, given the context of the industry today. What will be interesting to see is how they go back on track to making those cars more affordable and continue to drive market share. And right now they're playing a little bit, I shouldn't say playing, but they're acting a little bit on the insurance. That's when we're improving affordability. There's been a lot of talk about should they do their own financing of cars, where they would be able to adapt the residual values to each customers and improve affordability. And of course, at some point, there's the need to launch and sell more affordable vehicles. Part of the discussion on those vehicles is also there's been that obsession with range. And at this stage in the technology of batteries, range comes with bigger, heavier, more expensive batteries. And if the industry is able to, of course, continue to improve density of batteries, have the same energy on lesser material content, or if consumers are comfortable having cars with less range, and if they're comfortable to have the ability to charge those cars easily, then we'll be able to bring down the price point of EVs. But right now, we're still in a situation where EVs are only affordable for a relatively limited segment of the population. And but that's not going to drive the transition to a cleaner transport. We need to move that paradigm to a more affordable car.
Something tells me people are not going to be willing to give up much of that range. Philippe Houchois, thank you for being here. Appreciate it. Managing Director at Jefferies. Thank you.